Whenever someone is going out and wanting to buy a home, we all are trying to get the best deal. And what we've been trained to look at is the interest rate. But as you'll see, there's many other things to consider when shopping and comparing loan estimates to make sure you understand how to pick the best deal. You're going to be looking at closing costs when it comes to a loan estimate, and those are fees associated with finalizing the purchase of said home that you're looking to buy. You're going to be looking at estimated monthly payments, another very important and key part of buying homes. And lastly, you're going to be looking at the interest rate, and in some cases, the APR, the annual percentage rate. These are the places in which you can compare and contrast to make sure you're getting the best deal for you and your family. One key place that most of you all out there are missing when it comes to wanting to get numbers is knowing where or who to request those numbers from. It starts with identifying what lender you are going to request the numbers from, okay? You have different types of lenders. You have traditional banks, Wells Fargo, Bank of America, Chase. These are our big monolithic banks. You have mortgage companies like myself, or mortgage banks, where we specialize in the mortgage function from start to finish to help you as a potential home buyer. Also, you have mortgage brokers. The concept is we have relationship with several different investors, people that lend money to you, potential home buyer, to help you get into a home. And we shop to get you the best deal. And then lastly, you have your credit unions. So these are 4 separate entities in which you could potentially reach out to ask for a loan estimate. Now, once you've decided on who you're going to reach out to for the loan estimate, your next most important step is gathering the documentation that said lender is going to need to be able to give you the most accurate quote possible at whatever stage you are in your process. We're going to make the assumption that this is the beginning stages, right? You haven't actually gone out and started looking for homes with a realtor yet, but we'll make the assumption that you've been properly approved, meaning that you've submitted an application with one lender at minimum, okay? And so with that, you want to make sure when you're reaching out to the 2 to 3 lenders that you are going to reach out to, or however many you're going to reach out to, you want to make sure that they all have the same thing in common. And this is so important because if not, it's like the old adage, you're comparing oranges to apples. So stuff like your credit score, the middle score of the lowest middle score of all applicants on the application. They'll need to know that, right? Employment documentation. If you're not actually sending the employment documentation to everybody, you can let them know, hey, the gross income, the application gross income is XYZ, okay? Same thing with your credit obligations, your monthly obligations, car payments, student loan payments, any type of debt in that nature that you have a minimum monthly payment on, you can add that up. My total, or the application total debt, monthly debt, is $300 a month, $400 a month, whatever that case is, okay? And then what I recommend is giving an example house, might not be the house that you're buying, but an example of the home that you might look to buy in the area that meets the price range and it meets what you're looking for as far as a house is concerned. And I would share that with all 3 lenders, or however many lenders that you're going to send out this loan scenario, so that they all have the same information, okay? So these are the things that you want to make sure you share with those folks that you're requesting an estimate from. Now, how are we going to reach out to these lenders? I would say the best way to convey the request would be via email, so that you could gather those emails into one place. With all of these email systems that we have now, even the free ones, you can set up a folder, you can set up some type of rule, so when that information's coming in that's related to this process of you buying a home, You're not inundated. You don't have a bunch of junk in your inbox. You can automate how this information comes into you so that you're able to attain it readily and be able to make the decisions that you need to make. Second form of communication to me would be via text. So you want some type of documentation where you could go back and review what it is, put side by side what these folks are saying so that you can make a decision. This is strategic by doing it this way because you'll be able to tell a lot of things, not just interest rate and loan program, but customer service, meaning how do these folks respond? Now you should have received your loan estimates. This is a very important step when it comes to communication and how quickly and completely your potential lender gets back with you. Those are things that you want to pay attention to. Obviously, you're going to be looking at your interest rate. Is it fixed? Is it variable? Your loan terms, right? As far as the duration is concerned, the monthly payment, the closing costs, any additional fees. It'll look something like this, okay? And if you guys want this document, comment below and we'll see about getting you this information. But this is a loan estimate. If you are not locking in your loan at the time that this estimate is given to you, you have to realize that this is just an estimate. And as I highlighted this area here, if your interest rate is being locked, that would mean that you've done an application, you've gone through the pre-approval process, and most lenders are going to lock you in when they know that you have a house in mind because everything is time sensitive. If not, it tells you before your closing, your interest rate and all these fees can change. And you may be asking why. And the reason why is because we don't have a house yet. We don't know how to have a house. So the goal of this exercise is, number one, am I picking the right partner based upon how I like to be communicated with? And how accurately and promptly do they respond? Don't just focus on the interest rate, okay? What you also want to focus on when it comes to a loan estimate, in my professional opinion, really is on page 2 of the loan estimate. And this is your Section A fees, your lender fees, because this section is really the only section we as lenders can guarantee at this point in time. Okay, this is the section that is going to outline, okay, what the lender's fees are, regardless of how many different lines they've itemized them in. And I think that's a good practice to itemize fees. You might have some people say, well, oh, we don't have Section A fees. Yeah, they do. It's baked in their interest rate. Okay, so that's the difference why some people's interest rates are higher than others, because they're playing 3-card Monte and they're saying, hey, we don't have any cost of doing business, which makes no sense. We're giving it to you for free. Remember, the freer it seems, the more it costs, right? So that's where you want to understand the difference between interest rates and APRs, because an annual percentage rate is the calculation that comes up to show you that there's a cost of you getting this credit based upon an annual rate. So if the interest rate and the APR are different, that's where your cost is. So Section A fees are what the lender controls, less discount points. Okay, when we talk about discount points, that's when you're buying the rate down. Okay, what is a discount point or point? A point is, those are fees, monies that are paid up front that we pay to the end investor, where you say, hey, I want to give extra money to buy my rate down, okay, because I want a lower rate. That money doesn't come into my pocket. That's for you to buy the rate down, and that's a cost. It may not be a good idea to do it. It may be a good idea to do it. Again, this is why you're going through this process to choose the lender that you know, like, and trust, to be able to explain these concepts to you and make it make sense to your specific situation. So when it comes to the loan estimate, Section A fees are really the only fees that the lender could hang their hat on, unless you have a contract. And if you've had a contract and you've applied with that lender, then by law, 3 days from you giving me that receipted contract, I have to disclose to you your initial disclosures, and more likely you will get a official loan estimate. Okay. loan estimate. But this is what it looks like. So now let's turn the corner. So now the lender or lenders have responded and you've received however many loan estimates based upon that one specific scenario that you sent out. They've sent them back. Now what you want to do is you want to take time and review the loan estimates and compile your questions. Your questions should be specific to the loan estimate that pertains to the lender's cost, the Section A fees on page 2. Is my rate locked in or is it still floating? That's a good question. Explain that to me. Are there program specific fees? A lot of down payment assistance programs have additional cost. What are those costs? Highlight those for me. Because if I'm comparing apples to apples, then each lender should know what those costs are. And if they don't, that should tell you if you want to deal with that person or not. The questions should be questions for the lender to clarify what's on the loan estimate. And again, most of us have been trained just to look at the interest rate. I want you to look at more than that. I want you to look at the response. Some things, some premium services cost a little more, but you're going to be able to get from point A to point Z in a more efficient, less stress-free. Now it's decision time. You've got everything in, you've gone through the steps, and now you're reviewing these estimates and you're comparing them side by side based upon the same property, the same loan type, the same program type on the same day. And so you want to look for the overall best deal that deals with your specific financial situation. And that might not always be the lowest cost. Just keep that in mind. In conclusion, guys, requesting a loan estimate is a vital step in the home buying process. And it's a step that more of us that are first generation financial literate need to become more and more comfortable with, and especially teaching those that are coming behind us so that we can know how to shop and do it properly. And so by following these outlined steps and carefully evaluating the estimates provided by the different lender or different types of lenders, you can ensure to make an informed decision that aligns with your financial goals. But remember this, the right loan can significantly impact your overall home buying experience. So take the time to do your research and choose wisely, because certain things that we do are left brain function and others are right brain. When we put them together, we use our whole brain to make the best decision. There you have it. If you like content like this, don't forget to share it with somebody. Leave a comment. Most importantly, be good to one another. Let grace abound. Peace.